So markets up marginally today, despite the tariff threat in Washington and ongoing violence in the Middle East as America and Israel continue attacks. We're joined now by Jimmy Lee, CEO of Wealth Consulting Group. Jimmy, thanks very much. Plenty of cross currents there always are in the markets. What's your feeling first off about the attacks on Iran? What should investors bear in mind?
Andrew, great to see you. Yeah, great to see you, and certainly lots of information for investors to assess. So far, it looks like investors have taken the war with Iran in stride. And while we've seen oil prices spike a little bit and a sell-off, we've had nice recoveries in the last 2 days, where the market's recovered in the afternoon into the close. And today, seeing the market open positive, I think, is a good sign. It could mean that we're, trying to find a bottom, or maybe we did. And so I think investors are, again, taking this in stride. And I think, we've had a few days now since this war started, and analysts have had a chance to reassess their views for 2026. And I think the consensus is still that even with this war and with oil going up a little bit so far, that, analysts are positive for potential good returns in equity markets in the U.S. and actually abroad outside the U.S. too.
Are you understating the impact on the energy market? And I know crude is always very volatile, but we did see prices hitting the highest since 2024.
I think there was concern, right, that the Strait of Hormuz could be closed, and what impact that would have on oil prices and the effects on that on a more long-term basis with inflation. And so certainly that was getting priced in, I think, when we saw some more volatility. But I think that currently the thinking is that oil won't get disrupted to the point where we're going to have sustained high prices, high enough that would cause real problems at the pump, and sustained higher oil prices. And so that's what I think investors are thinking about right now. So, on our side of the fence here in the United States, we think that, the markets will actually do well. And I think most analysts here in the United States do think that this year, like the story for last year, that earnings and revenue growth and margin expansion possibly could continue to save the day for stocks. And at our firm, we do like the cyclical sectors, and so we think that those sectors will continue to do well. But we think that markets will continue to broaden out too, and we do believe that maybe interest rates, while with this oil spike, there's a little bit more pressure on rates coming down. We do believe that rates will come down, and maybe a little bit more than what investors think right now.
What about the tariffs? Do you spend a lot of time thinking about them? I mean, it's just a weather vane, isn't it? The actual policy keeps turning.
Yeah, the tariffs, very interesting, right? So last year, I think April 10th was when the market bottomed off of Liberation Day, and it's been volatile with what's been going on with the Supreme Court turning down the tariff, and now with the new tariff regime that is being put in. I think investors are confused, but I think for the most part, people are pricing in somewhere between 10, 15, 20% ish on tariffs, and that's what the analysts are using for their projections going forward for everything. And so I think that while there's a lot of noise there, and it could be very messy unwinding the old tariffs and implementing the new, I think that as far as markets are concerned, I think most investors are sort of through this. Now, I think there's probably more risk to that than what I just said, but I think that's where investors are standing with tariffs at the moment.
You feel that the market will continue to broaden into things like small caps and overseas stocks, or stocks outside the USA. Why is that? Just concerns over the hype on AI and the valuation of the big techs?
Yes, I think that's the biggest story, even and bigger than the war with Iran at the moment, is the sell-off that we've seen in software stocks and anything that could be disrupted by AI, and really looking at the terminal value of these companies, not what's going on currently today. So I think that's really upended the market. That, along with some of the private credit names that have lent a lot more to the software sector. I think that's what's really what investors are trying to wrestle with now, is how will AI really impact companies, and how do you value that? I think that's very confusing, and so I think there's a lot of speculation going on there. And I think the bright side of it is that I think companies that are using AI are going to start to report some good results. Now, how that affects jobs is another issue altogether. And so the uncertainty about AI, I think, is the bigger news of the day.
It's interesting. Yeah, you mentioned private equity, and we have seen selling in some of the huge names in that space.
Yesterday we saw some bottoming out in some of those names, and I think that's, again, another good sign. And at the end of the day, I think investors were selling a lot of the speculative areas of the market, in 2026, and buying as far as companies that are least likely to get disrupted by AI, really buying anything and driving those prices up. So I think investors are seeking areas that have more value, such as small cap domestic stocks. We think that small cap stocks rally with interest rates falling, and so will the tech sector. I think there's some tech names that have been oversold that I think are good potential buys for investors that are looking for a long term in some of those names. And so we think some tech is actually good on some of these dips. I would remind investors that in 2022, not too long ago, that the FANG stocks dropped an average of 46%. So we've been cautioning investors to not be too overweight these Mag 7 names. And really, technology's been underperforming, not just recently, but for a while. And so we do like those other, cyclical sectors like industrials, materials. We think financials will bounce back once they get through this kind of, shift with scare, the scare with AI.
Thanks very much, Jimmy. Always great hearing from you. Jimmy Lee, CEO of Wealth Consulting Group.